All right, good morning, everybody. Hope everyone had a wonderful weekend. Today is Monday, September the 29th, here for our live trading session. Now, a lot going on in the news right now, especially when it comes to the markets. Want to be sure everyone's abreast of that. And if you are joining us for the first time, welcome. I promise you are going to learn more in the next hour than you have in years trying to figure out the markets, because what we're going to do, or what I'm going to do, I guess I should say, is give you a methodical process, a step-by-step method for identifying not only what stocks to focus on, which ones to buy, and exactly where to buy them. I'll show you why I believe we're in a strong bull market that's going to continue higher, what to expect going forward. We can touch on precious metals and interest rates and everything in between, so welcome. If you would, type in the chat there where you're joining us from. Always curious to know where all of our viewers are coming from. And we'll see who's the closest to me. I am in Fairhope, Alabama, down the Gulf Coast. So a long way from Wall Street, but I promise I've been doing this a long time. I know what I'm doing. I'm going to help you guys make some money today, hopefully. So what you're looking at right now is a chart of gold. Unless you've been living under a rock, you know that gold has been surging for the last year and a half, currently at $3,800 an ounce. And there's been several perfect buy points in gold. Today I'm going to show you how to identify these. But one was right here, the first of, August 29th. And if you got in there, you'd be up very nicely here. There was another nice buy point back here August of last year at around 2,400, which led to a big run. And when we initially told people to buy was here in March of 2024, so we got through $2,100 an ounce. And if you listened, you were up more than 80% on gold, which is, a lot of you know, is a huge move for a precious metal like gold, okay? And so it all comes down to following a very specific pattern that lets you know when to buy. And you can see I've drawn it out here on the chart a couple of times, and knowing where to focus, all right? So, three-part process. Step one, are we in a bull market? It is a lot easier to make money when everything's going up. This is the S&P 500 index. Would you say we are in a bull market, yes or no? To me, when you've made 26 new all-time highs, clearly we're in a bull market, right? Don't fight the trend. We want to be owning stocks. We know the markets are rising. Let's participate, make some money, right? Okay, second thing is, where do we want to focus? Now, there are more than 8,000 publicly traded stocks out there. You watch this feed. You guys will feed me 100, 200, 300 of them, everything from some little 10-cent biotech firm to Apple and NVIDIA. It's a big sea out there. And, there's really no sense trying to go through every single one of these charts. So what you want to do is focus on where the strength is in the market, okay? And what you need to understand is what drives stocks and what moves markets is not you and me, it's the big institutions. It's BlackRock, it's Warren Buffett, it's Goldman Sachs, it's the, $50 billion Notre Dame Endowment Fund, it's the New York City Pension Fund and the Travelers Insurance. It's these multi-billion-dollar funds. And so whatever they are buying is going to go up, whatever they're selling is going to go down. Period, hard stop. And so when you understand that, and sure, there's going to be every once in a while a little stock that you saw looked good and it turns out good and made a big move. But if you want a repeatable process, a way to really allocate dollars, you need to understand that your job as an investor is not to have better insight than everyone else. It's not to guess the earnings. It's not to outsmart the millions of people you're competing against. It is simply to interpret what is happening in the market, to identify where the big dollars are flowing and hitch your wagon to that. Basically, figure out where it's raining and drop your bucket there. We're not in the needle in the haystack business, okay? Because when they're buying, these stocks, these areas go up for days, weeks, months at a time, because it takes them weeks and months to build those big positions up. When Warren Buffett's buying a stock, he doesn't just go to E-Trade and hit market order for $50 billion. His traders are out there buying day after day, week after week for months on end. And when they do that, the stocks rise. And so what you're looking at here is what we call our industry strength indicator. I don't even like the word indicator because it's not. It's just basic math. All it does is it takes a list of 45 different sector ETFs. Here's the full list if you're curious. And these ETFs represent certain areas of the market. So like KBE is the banking ETF. It just holds Wells Fargo, JP Morgan, Chase, Regions, all the big banks, right? This is a commodities ETF, cloud computing, clean energy. So these are the little subsectors of the market. And all we're doing is saying which ones are up the most over the last 1 month, 2 months, 3 months, and 6 months. And by doing that, what we can see is where dollars are flowing into the market, which areas are consistently outperforming and rising up the ranks, okay? Now, I want to ask you guys one favor. I don't really know how the YouTube algorithm works, but I think if you hit likes, it helps. Would y'all do me a favor? Just click the like button real quick. I'm not going to ask you for much today, but I'd appreciate it if you would do that. Okay, so what areas, and tell me, put your feedback, I want this to be interactive. What areas do we see rising the most? Which sectors or subsectors are popping up list after list after list? Who can tell me? What do you see? Nuclear and uranium, absolutely. It's right here. It's right here. It's right here. It's right here. Clearly a leading area. And this has been, by the way, this is not, Ross just discovered this on September 29th. We were showing this 6 months ago. Nuclear at the top of all these lists. And that's why, and nuclear has continued to outperform. We got into a bunch of stocks that went up more than 100% in a couple of months. Energy, yes, Martin. Michael, mining and metals, 100%. Yes, mining and metals, mining and metals, mining and metals. And what are we seeing? A historic rise in gold and silver prices, so it makes sense, right? We're also seeing quantum computing here. It showed up on a couple of, it's really fallen off some of these older lists, but it was a big leading group earlier. And so when we do that, when we figure out which areas are the strongest, we know very quickly where to focus. And this over here, this watch list on the right, I made this back in April, shared it with all of our members here. And it's just the top 8 or 9 stocks in each one of these. So crypto and digital payments was very strong. And Coinbase, Robinhood, MicroStrategy, Core Scientific, Galaxy, Cypher, all these have exploded. Again, I made this list back here in April. Okay, this stock's up 500% since then. We identified the nuclear space, and look what OKLO has done. By the way, we bought it right here, okay, at 35. It's at 117. LEU has surged. UEC, you see the breakout pattern, which I'm going to teach you here in just a moment. You'll learn how to know to buy right here before the stock accelerates, in this case, 88% over the last 2.5 months. This is real money, okay? I don't know why people don't teach this. I don't think most people know it, but you guys are going to be better equipped. We identified SMR. I bought SMR. I bought it in my personal account. We recommended it for our members right there. Not during the chop, not on the way down, right as it released before this explosive move higher. And these ain't 10 and 12% gains, guys. These are 50 and 100 and 150% moves. Quantum computing, QBTS. I put this one out on one of those 2 trades in 2 minutes 2 weeks ago. Identify this one for you guys at 1650. Those who took it, you're up 65% in 3 weeks. QUBT has been a big one. You can see the breakout moves. IonQ, right? So these areas still, now crypto is weakened. You know, we don't see crypto, well, it is here on this list barely, but it's falling out. But before, it was like number 2, number 2, number 2, number 2. And so all you're going to do is find those leading 3 or 4 areas of the market and pick out the top stocks. And you can do this really quickly with Google. Just Google the ETF and you can see what their holdings are. So I'll just shorten this for you real quick. There's 3 areas right now in the market you want to be laser focused on. Okay, and those are nuclear. The ETF ticker is NLR if you want to buy that and get some exposure. The top stocks in the nuclear group are OKLO, LEU, UEC, SMR, all of these. And it's all about power right now. AI is sucking massive amounts of power, currently taking 4% of our nationwide output. Expectation is it's going to require 25% by 2030, so they're scrambling to produce power. Nuclear makes a lot of sense, and the stocks are benefiting from that. Okay. Other area you want to focus on, quantum computing. They are doing sci-fi level stuff here. These stocks are surging. QBTS, QUBT, IonQ, Arcit, Rigetti. I mean, look at these moves. Got another little breakout right in here. Okay. And the third area, yes, the mining and metals area. We're seeing gold surge. We're seeing silver surge. In fact, they're both gapping up this morning. I've got a couple of 100-ounce bars of silver showing up at my house today. Hope nobody has my address. Even some of the metal stocks, and the miners are doing really well. MP, Carpenter CRS, this is kind of weakening. Sandstorm's a monster. CDE, Coyer Mining, absolutely phenomenal. IAG. And don't make the mistake of looking at these charts and going, oh, it's already up. I missed it. Folks, remember Newton's first law. An object in motion tends to stay in motion, right? A stock going up tends to keep going up. Ride the momentum. Stay with these things. I'm going to show you how to buy the breakout. So all of this hopefully giving you an idea of where to focus in the market, okay? So the question then becomes, where do we buy? Well, we are going to look for an extremely repeatable pattern. And I can find it in any of these leading stocks. Let's look at OKLO, for example, because this is a clean one that happened just about 2 weeks ago. And there's another back in here. All right, so here's what you're going to see. All right, pay attention to this. This is going to make you a boatload of money. All right. You know you're in a bull market, right? So stocks are going up. You're looking for stuff to buy. You know where to focus. We've identified nuclear, quantum, gold stocks. This is a nuclear stock. Okay. We've identified the top 10 nuclear stocks. And literally just Google like top 10 nuclear stocks. You'll find they're not hard to find. Okay, so we've taken the universe from 8,000 stocks down to like the 30 we want to focus on. You're already miles ahead of everybody else. Yes, 4U's is good. CCJ, Cameco, great one. Adonis, yes, I bought a call option on that last week. I'll show you in a minute. All right, so you have your focus area. So this is a pattern you want to look for. Number one, you want to see the stock make a big aggressive run higher. Okay. I mean, you can get them off the lows. I can show you that in a minute. But a stock being bought actively by big institutions, heavily coming in, is going to make it go up. Don't overcomplicate this stuff. Don't have a bunch of, oh, this is my trend indicator, my double super secret squeeze. Total garbage. If they're buying it, it's going up. All right, this stock went up 200% in 40 days. That's all you need to know. It's being bought heavily. This is the one you want in. So you're looking for a buy point. All right, now this is when it happens. So when a stock has tripled in 40 days, there's going to be some people that sell. These institutions who are gobbling it up by the millions of shares also don't want to pay infinitely high. They're trying to get the price down so they can keep buying. So you'll see a news story out about how OKLO is overvalued. You'll see analysts downgrade the stock. You'll see these big spoof orders in the open hours of the market trying to trigger stop losses, whatever they can do to drive it down. If they are still buying, they're going to drive it back up. They'll, again, it gets a little bit high, send some sells, downgrade, news, whatever it is, drive it down, and then back up, and down, and back up. And what happens is you get this shallowing consolidation pattern that forms on the chart, okay? And what is happening here when you see this is the supply being sucked out of the market. We have to think about stocks in terms of supply and demand. If there is more demand and supply, more people buying than selling, it's going to go up. If there's more selling than buying, sorry about that, Mars, I just paused them. Thank you for the reminder. If there's more selling than buying, it's going to go down. No different than the housing market, the used car market, rare coins, whatever, right? I'm a bourbon guy. You want a bottle of 23-year-old Pappy? It's about $4,000. It retails at like $250, but they only make like 1,000 bottles a year. So the supply is much smaller than the demand. It's the same thing in the stock market. There are not infinite shares of stock. What you are trying to do is use that supply and demand dynamics to identify when demand is outstripping supply. And so what's happening in the shallowing is they're buying it up and buying it up. They're shaking out people. They're running your stop losses. They're putting out stories about why the stock could fail or the nuclear sector's in trouble or, any number of things. But eventually, they gobble up all they can. They've bought all the shares anyone can sell to them. They can shake out in this kind of $60, $70, $80 range. And so at this point, they've gobbled up as much supply as they can. If they want more, they got to pay up. No one else will sell it to me for 70 or 80. Would you take 90? Would you take 100? Would you take 110? Folks, everything's for sale. Any stock in my account is for sale right now, today, if you offer me a high enough price. And you're all the same. That stock you've offered $20, if I offered you 200, you'd say, how would you like it delivered? It's the same thing here. And so when this happens, once it shallows out, and this one isn't perfect, but you can kind of see like it stalls here around 80, stalls here around 80, stalls here around 80, stalls around 80. Once it clears through, once it breaks out above this area, and it does so cleanly, big move, opens at 83, closes at 95, up 15% on the day. Look at the volume. Big uptick in volume as trading come in. That's where you want to buy. That's the breakout. And this is how that played out. Okay? Now it's pulled back a little bit today, or last week, excuse me, but still you're talking about a 70% move in 9 days. This is not some penny stock. This isn't some 10-cent nickel and dime meme company. This is a, $8 billion? $16 billion company. Okay? So this is going to be your process. And when you're in a strong bull market, these breakout trades are the way to get the most bang for your buck. Now, there's additional benefits to trading this way. The risk is less. Okay? When you buy a stock, the first question you need to ask yourself is, where am I wrong? You bought it at 80. How low does it need to fall before you say, I was wrong, I'm out of the stock, I'm taking the loss? And if you don't know that number when you first get in, I promise it's going to get a hell of a lot harder to figure it out once you're in the trade. Once you're down $100, $1,000, $10,000, it is much, much harder to think with a clear head. Okay? Oh, thank you. I just put a link in there. Guys, by the way, we do these sessions every Monday, as well as a live session with our other analysts every Thursday. If you guys would like to join us, there's a link there. It's $5 for the entire year. You get the live sessions. You get access to our indicators, including this market health indicator and the market health gauge, which are extremely beneficial. So if you want to join us, hang longer. I encourage you. It's $5. It's less than the coffee you're drinking right now. Okay. Okay. So, and the link is tradewithross.com. So here's why the risk is lower. And I'll look at another one so you don't think I'm just cherry picking this stock. Let's look at some other ones in here. Let's see, Coinbase. Whoops. Coinbase was good. Now, I should mention this. You're going to see the same pattern on the lows, okay? What happened, like Coinbase was surging. It went from 150 to 350 here from September to December. And then what happened start of the year? What happened that drove all the big growth stocks down? Anybody remember? Yeah, the tariff war, right? President Trump declared a trade war on the entire world. Everything went down. Market is the quickest bear market we've seen in a long time, came right back up, but everything sold off. And so the same pattern is going to appear. It's going to fall until they start buying. And once it finally comes in and starts to shallow and tighten and absorb, that's when you want to get into these moves going higher, okay? But I wanted to show you why the risk is less. Let's just look at like a cipher, maybe. Cipher would be a good one. Okay, let's take. Sorry, it looks like I'm cherry picking. I'm just trying to find like a really, really clean example for you because it's easier to teach in like a textbook one. This is perfect. Okay, here's UEC. All right, now the buy point I've marked on the chart. The stock makes a big dip. Okay, in this case, 55%. It finally bases out. Or bottoms out, rises back up, and then starts this pattern, okay? Now, after it does that, the stock should not go back below this low right here. I've got the red line, okay? It pulls back, drives right back up into resistance. At this point, it should not go below that low. So it should not go below there. It rallies higher. I'm sorry, it pulls back, rallies higher. At this point, it should not go below there, right? These things the dips get shallower and shallower. The lows are higher and higher, right? So when I buy, and in this case I'm buying on that big wide arrow I've drawn there on the chart, my stop loss, as long as it's not too far away, is going to be that last swing low, that red line there. So let me take some of this off. So if I'm buying here at 7, I'm wrong here at basically 6. So my risk on this trade is 16%. Now this is on the high side. You can usually get this at less than 10%. But if I'm risking 16% to be up, what is it, 92, I'd say it's a pretty darn good risk reward. But with this shallowing pattern, again, you know where you're wrong pretty quickly. Like, look at SMR here. Let me go back in time. Look at the SMR pattern, okay? Now, again, this is off the low, so it came in like, nope, wasn't ready, and then it gets shallower and shallower and shallower like that. Where would your stop loss be? Like, at what price are you going to sell it if it falls to? Because you're going to be wrong sometimes. Things are going to happen. Bear markets come out of nowhere. CEOs step down. There's all kinds of stuff we can't predict. Where am I wrong? Just give me a number. What price on this chart, what does it need to fall to for you to say, oh, nope, I'm out. I want to be out of the stock? Can somebody tell me? Newbie, whatever. This is TradingView. Yep, the charts are app called TradingView. I think it's the best charting out there. Robert, thank you. Trade Desk, bingo, 16. Y'all got it. Yeah, $16, right? Right here at that swing low. That's where I'm wrong. So when I buy here, in this case at $18.90, I'm immediately putting a sell stop order in at $15.90 that says if it goes down to there, sell it. I don't want it anymore. Okay? So, again, this is 15%. I mean, the calmer stocks, your Apples, your Nvidias, your bigger names that aren't quadrupling in a couple of months, you're going to have like 7 or 8%, but still 15% risk. And I mean, you're off to the races, right? So what you have is a model to say, okay, man, bull market, yes. Where's the strongest groups? Here. Perfect. I'm going to focus there. Nothing else exists for me. What are the top 8 or 10 stocks in each of those 3 groups? Got it. These are my 30 stocks. I need to look at anything else. I'll go through these once a day. I can do it in, 5 minutes. And then I'm looking for a pattern that historically has led to these big explosive gains because I'm waiting until the stock's being gobbled up and absorbed. I'm waiting until the supply's been sucked out of it. So demand is still the same, but the same amount of buyers are now chasing a fewer number of shares, right? So just shrink this down to something simple. Let's say you got, 10 guys in a room with $1 each. And then 10 people come in there selling some widget. Well, a buyer's going to meet a seller. They're all going to sell for $1 a piece, okay? Well, 5 of the sellers now leave. Same 10 people, same $10 now chasing 5 widgets. Well, now they got competition. There's twice as many buyers as there are sellers. Anybody will give me $1, I'll give you $1.50, I'll give you $1.75. They'd rise in value, right? That's the basics of supply and demand. So it's the same thing here. That's all we're doing. And so we've got relatively low risk. We've got explosive upside. We've got the leading stocks being bought by institutions. We've got a strong bull market. You have every possible advantage. And so that's all trading is. It's a game of numbers, right? You want to be right more than you're wrong. You want to win more than you lose. And if you do that on a big scale, you're going to compound that into a great deal of money, right? So there is no investment strategy that wins 100% of the time. It doesn't exist. It never has. It never will. The best traders in the world, look them up. Look up Paul Tudor Jones. Those guys are right less than half the time. But when they're right, they make $5 million. When they lose $500,000. And so if we've got a process like this, we're risking 7, 8, 10, maybe 15%, and we're making 50, 100, 150%, even if you're only right a third of the time, you're going to do fine. You're going to make money. If you're right half the time, you're going to make a fortune. And in a good, strong bull market like we're in now, if you can get up 60, 65% of the time, you won't believe what you can do. Okay? Questions about this before we proceed? Michael, what if you have a big pop, say 10+% in a day? Usually move your stop loss. Yeah, so my goal is to get to break even as quickly as possible. Okay, so let's just take this one here. We bought SMR. It's up 15% the first day. Okay, let me go back so you can kind of zoom in so you can see that. All right, first day, I'm up 15%. I bought at 19 and it's at 21.5. That next morning, my stop loss is going to break even. It's going right there to what I paid. This is what I wanted to see. I got a big move. It happened on big volume. It looks right. I'm not going to let this turn into a loser. Okay? And so a couple more days go by. Now, at this point, I'm selling some. I know it went much higher, but I took the trade. I'm just telling you what I did, not saying it's right or wrong. But I bought here. I'm up 58% in 11 days. I sold some. You're never going to go broke taking profits. Don't take some off when you're up 8% and you risk 10. That's silly. But we risked 10 or 15. We're up almost 60%. I sold some here. And when I did, I raised my stop loss. And you can just go in, adjust the order. I raised it to right here. Okay? It continued. Let it play out. Now look what it did. It comes up here, pulls back, which is called a natural reaction. That's what Minervini calls it. Breaks into new highs. At this point, where's my stop loss going? Where should I bring my stop to? And there's no right or wrong about this, by the way. Some people, you're up 50%, I'm out, I'm happy, nothing wrong with that. But I like to do kind of a combination of I want to sell some into strength, like when it's up big, when it takes some off. I also want to let it run a little bit. Matcha, Michael, yeah, I'm kind of with you guys. Robert says 37. That would be aggressive. You could go up there and lock it in if you wanted. What I would do at this point, my stop loss would come to here. And it did. I'm just telling you what I did, okay? Let it play out and see if it holds. Again, I'm looking for new highs. All right, whoop. Stop. Sorry, let it run away. Okay, it pulled back. Didn't hit my stop, made new highs. At this point, my stop loss goes up to here. Now, at this point, it's like it's a good problem to have, okay? You're sitting up 160% in 2.5 months. Your wife, your husband thinks you're a god, okay? You can't really screw this up, all right? So if your 160% turns into a 120%, so be it. But at this point, that's a lot of risk, okay? I mean, that's a pretty big drop in there. So when I'm up big, I'm probably going to go, all right, let me tighten this up even further. I had a dip in here. I'm going to put it to there, right? And so that would be 125%. I'm up 160. But if I let it come to here, I'd take 76. I'm not turning 160 to 75. I'm not willing. And so I'm going to tighten it to here. And I'm out. I'm out of the stock right there. Okay? I wrote it, ride her till she bucks you or don't ride at all. Right? 120%. Now, I took some off here at 50. I feel pretty stupid, right? Not really. I'm never going to complain about making 50 or 60% in 9 days. I'm not going to complain about the stock I sold in here. I took, like a third off here. I took like a third off here, and I think I took my final exit there. So net, you made 60% on the third of it, 115 on the third of it, 120% on the... So net, you made roughly, what does that come out? I don't know, 90-ish, 95% or so on your money in 2.5 months. Frees up capital, exactly, Robert. Nothing wrong with any of that. Okay? Now, market's about to open, by the way. Stocks are gapping up. Boom. We're about to go up. So notice we got a strong. So OKLO's gapping up to 118. See the pre-market price. LAU, so we got a risk on day here. Let's see. S&P, yep, also gapping up a couple of dollars a share. Now, what if you were trading a smaller account? Okay, and listen, we're all in different positions. Some of you got $5 million you're trading. Some of you got 500 you're trading. This is going to be advice you're not going to hear other people say, and I actually shouldn't even call it advice. This is just my thought process. Is at $5,000 and under, I'm taking very big swings, and what I mean by that is, most people risk like say 1% of your account per trade. You might put 10% into each stock, something like that. If I was trading personally, and again, everyone's different. If I was trading a $5,000 account, I'm not going to put 500 bucks in each stock. Even if I make a 90% gain like that, which is colossal, I'm up 450 bucks, right? Most of my wins are going to be up 50 cents. It's just not enough for me. So my thought process is, if I got a $5,000 level, I'm going all in on a big play. I'm going in aggressively. Now, if you're, 70 years old or you're nearing retirement, you got a nest, don't risk it all. But like if you're 25, you're 26, you got $5,000 you're trading, you got a lot of years to make it back, I'm going to be more aggressive. And so I'll give you an example. And I opened up a couple of small accounts to test this. I'm trying to make a YouTube video on them. This is CCJ. It's Cameco, uranium miner. So remember our nuclear stock list over here on the right? See it right there, CCJ? You see the breakout back here? I mean, can you see how this plays out, by the way? Shallow, breakout, big move from 50 to 80. Again, coming in, still deepening, and then up. Now, honestly, what we had here, this was a failed breakout. So it's a little premature. Now, your stop loss would have been here, so it wouldn't have hit you. But it was a little premature. It jumped on earnings or some kind of news here, tightens up, breaks out, right? And so it ran up, and then if you were watching on Thursday, everything just sold off. This happens sometimes. Everything gets hammered. This stock came down, what did it come down? Like 10%, which is a lot for a CCJ. And this creates what I call a retest. All right, so if you're asking yourself, all right, Ross, great, those breakouts look good, but a lot of them are running right now. There's still opportunities. We'll go through them. But if I miss the breakout, and again, this one was not perfect because this was kind of premature there, okay? But if I miss the breakout, and that's going to be like, right in here, the big move out, my second favorite place to buy is on what I call a retest, where it does what it should. It breaks out that first day, goes from 80 to 87, and then comes back and squats down the next day, or in this case, a week later, okay? That is a retest area. And so instead of buying as it breaks out through resistance, you're buying as it steps down onto support. Because what was resistance, these areas that stock can't get through, typically becomes support on the way back down. All right? And so you could buy CCJ on a retest right in here at 80. Now, let me see if I can log into this account here. Hold on. I opened a couple of accounts, two reasons. One, to test out these platforms and just kind of see, so I can make a video on them. Other is to kind of do a small account challenge. So I put $5,000 over at E-Trade. And what I did was I just put it all into this call option here. Whoops. I'll get back there. Let's see. All right, so you see it's up, $1,100. I just put the full $5,000 into it. And this was Thursday, so it was, 2 trading days ago. But it's up 23, 24% in a couple of days, right? And the reason I did that was it was right here on this retest. This is when I bought that option. And so, I bought the November $85 call option. I don't remember what it cost. What was it, $4, $5 a piece or something, which would be $400 or $500. So I bought about 8 of them. Maybe $550, something like that. I mean, you can see I got like 8 of them. Okay, so I paid $6 for them. There they were. Number $783. But it's a very leveraged trade. So number one, I'm all in on one stock. Number two, I'm doing with options, which is highly leveraged. So if this stock had come down and failed and broke through here, I'd probably be down 20 or 25%. It's not I wouldn't put all my money into leverage call options with my entire retirement account. But on a smaller account, I think you have to take some concentrated gains. And it does 2 things for you. One, it makes your trade actually move the needle. It's a tiny little $5,000 account, but about $1,200 something bucks in a couple of days. And 2, it makes you focus only on the absolute best trades. If you're going to go all in on something, you're going to make sure it's in a good market. You're going to make sure it's in the right group. You're going to make sure it's one of the top 5 or 10 stocks in that group. And you're going to make sure you've got it coming either right out of a breakout or on a perfect retest, something like that. Okay. And so that's a way you can, if you're trading a smaller account and you want to be really aggressive with it, this is how I would suggest you do it. Okay. Again, not financial advice, consult a professional, etc. But, that's what I would do. Now, the other thing you can do, and this is, if you're like 10 grand and up or so, is just really get aggressive on a certain area. So again, this day, Thursday, when everything started dipping, I just bought a couple of the nuclear stocks. So again, I'm doing another little test account over here at Robinhood. We'll see what happens. I put 10 grand into it. And I just went full leverage. So I put, 200 grand or 20 grand of the stocks. I just bought the big 3, NuScale Power, GE Vernova, OKLO. Not up much here, a couple $100, etc. This is no leverage, it's just the stocks. But I'm just buying into those strong areas on a weekday. And so, we had GE Vernova pulling down in here, bought that, had OKLO. And I was a little bit late. I meant to buy it right here at 110. I got a couple bucks higher. Bought SMR, right, on the weakness in here. And so if you want to just buy stocks, just focus on those stronger areas. Okay, market's already open. You're not showing breakout trades a day. All right. Ooh, some testy ones out there. All right, calm down. We'll find some stuff. Goodness. All right, let's see what we can find here. OKLO. All right, is this where I want to buy OKLO? No, it's pulling back. But we don't have a clear breakout set up. LEU. Now, you'll notice that, when I'm in the right group, when I'm in the right stock, when I got a strong market, I don't need these giant perfect patterns. This was kind of a micro pattern. It's pulling in. You see it kind of tightening up like that, and you buy it right in here. So it doesn't have to be to all-time highs, although that would have worked as well, right? You get kind of a bigger pattern within. Let's look at something we can buy here. Give me a second. Let's see what we can find. By the way, guys, there's a link down in there. We do these live every Monday. Also have a live Thursday session we do over Zoom. If you'd like to join our group, it's $5 for an entire year. There's a link down in there. You can also just go to tradewithross.com, but you'll get access to those market health indicators, the industry strength indicator. You can join our live session. We send out some trade picks, a couple times a month as well. So if you want to do that, click that link. Sorry, always hopeful. I turn the commercials back off. I've got to remember to there's a pause button here on the commercial, the ads that are popping up. So I'm trying to remember to keep hitting it. Now, if you're watching the recording, I apologize. There's nothing I can do about it. Uranium Energy looks good. SMR. Yet. BWX is a possibility. It's another nuclear stock. It is nowhere near a perfect pattern, but you can see some of those characteristics of a stock that's come in and shallowed up, right? So if I bought this here, I'm going to put a stop loss down in here to risk about 7%. Let me see. The relative strength on this, 95 out of 100. Decent growth in earnings, sales, a little bit of growth, decent margins, okay. Yeah, there's a possibility in here, BWXT. Let's see what else we can find. Somebody said, how about Roblox? Yeah, looks great. I like it. Now, I haven't seen the volume yet, so look at the volume down here on the bottom. See how it's falling off a cliff? This is good in the base, right? While it's consolidating, you want to see declining volume, but I really want to see it break out on some high volume. So it's 10 minutes in the market, too early to say here today, but if it does break out, I'd like to see it be a high volume day. Yeah, this looks pretty. What do we got here? Let's see. Let's go to a 1 minute chart. Okay, it's settling in. You do like an opening range breakout on this one, Don. We'll come back to this. I'm going to jot a couple of these down. Need some paper. We'll put something big on here. Give me a second. Roblox. I'm going to look at BWXT. Okay, let's run through a couple others here and see what we can find. Now, this would have been a failure, right? You see the shallowing, you see it breaks out, and then it just kind of, bleh, right? My stop would have been here. I probably wouldn't have even held, because if it doesn't go anywhere for 2 or 3 weeks, I wasn't right. But, you know, it's not going to be 100%. Occasionally, they're just going to kind of fizzle. But you should be right a lot more than you're wrong. Denison Mines, I mean, this one was perfect. Do you see the pattern here? See the shallowing, how it tightens up? This last month here just got really shallow and tight. It breaks out. You had 2 perfect buys, 3. It breaks out here, gives you a retest buy there, gives you a retest buy there. Any one of those 3 would have delivered a fantastic return. This last one, you'd be up 50% in about a month and a half. So really, really strong. Nanonuclear. Now, this thing's getting pretty choppy. Right? It's not the cleanest chart. It's a smaller one. It's kind of big swings back and forth. I just don't see anything. On GE Vernova, this has been a leader. This is GE's, by the way, fun fact, their most profitable spinoff of all time. Right? If we get this, I'd absolutely buy GE Vernova on a move above 650. It's been a leading stock of this bull market. You can go back very clearly and see these breakout moves, how it comes and it shallows and it tightens up. This one had kind of a flat base, broke out, and then, of course, the tariff situation. Nothing we can do about that. It killed everything. Another clean breakout through here, and it's trying to form another one. Absolutely like this one. Energy Fuels, looks great. Nice trend. Don't see a breakout opportunity in it. EU, CCJ. Quantum is a bit extended. QUBT. So what I'd like to see on this stock is it, tried to run there and couldn't. What I'd like to see in QUBT is for it to kind of absorb some supply here. Okay, it's gobbling it up. I want to see it just tighten in here for a couple of weeks. That would give me much more conviction to buy this. You gotta remember, you're looking at supply and demand. So think about all the people who bought over here at $19, $20, $21, $22. You had about 2 weeks of buying in there. All those suckers have been underwater for 5 months, 4 months. They bought in here on the hype because they don't know what they're doing. They saw their money go down 30, 35%. What do you think they're doing when it finally comes back? You've all been there. Don't act like you haven't. I've done it too. You buy a stock, you just can't help yourself. It falls. I don't do this anymore, but you get underwater. What do you do as soon as it gets back to where you bought it? You get out. You're at a break even. You're at a small win, right? So that's called supply. All these people who bought over here are just pending supply. They're the suckers who bought at 19 and 20 bucks waiting for a chance to get out. Your job is to let the suckers be the suckers, and you're going to exploit the supply and demand. All right? What else? I'm trying to find us some trades. Hold on. ARQQ, Rigetti's just a monster. Oracle. And by the way, guys, I am not a day trader. If you're like, I want to see him just go in and out of it. I've worked at day trading companies in my younger days. I can count on one hand the number of day traders I've ever met who consistently made money. I like Roblox here. Let's take some. It's an AI stock, although people think it's a gaming stock. I mean, it is gaming, but large AI infrastructure. It's coming out here at a nice little gap. What I like to do on these is what's called a 15-minute breakout, where I want to see it get above. So let's do that. Tell you what, let's just do this. What's the risk here? 3%. All right. We're going to set a buy order on the breakout of the 15-minute opening range at 142. So we're going to buy this on a stop at 142. If it hits 142, let's just make it 142 and like a nickel. Okay. Let's take 500 shares And I'm also going to put a stop loss down at like one. I'll throw a price in here. I'll move it in a second. 1 second. I can't see on the chart. Okay. I'm going to bring my stop loss. I'm going to raise it back up right there. Okay. So here is the order we've created. Oh, I've got to confirm this. All right. Here's the order we've created. We've done what's called a 15-minute opening range breakout. And all that means is a 5-minute chart. Each one of these little candles is 5 minutes. That's 8:30 to 8:35, 8:35 to 40, 8:40 to 8:45, okay? And we're saying, all right, this stock gapped up. Now, on a daily chart, it looks good. It's the breakout we want to look for, okay? So it's gapped up 3 or 4%. Maybe a 1-minute chart help y'all visualize this, okay? All right, but if it's going to gap, if there's sellers there waiting to take advantage of the gap, if it's going to gap into supply, it's going to come back down. So stocks tend to either gap and run or gap and collapse. And so it gapped up here. I don't want to just buy it. If I did, I'd be down a couple points. I want to see it absorb that first 15 minutes of trading and then push higher. I want to know there's still buyers up here, okay? And so what we do is just bracket the first 15 minutes. Say if it breaks the high, the first 15 minutes, I want to buy it. And my stop loss, the low of the first 15 minutes. If instead, before breaking out, it comes down here and starts going down, I'll just cancel these orders. Okay? So we'll come back and take a look at this. But I got, 500 shares to buy here at 142.05. I got a stop at 137, I guess 58-ish, just below the low. And if it's going to run today, again, on a gap up like that into new highs to a breakout range, if it is going to run, it should do so pretty quickly. If not, I don't want it, and that's fine. I'm not attached. I don't own anything. If it falls apart, I don't lose any money. Okay, let's go back. Somebody mentioned, y'all give me some stocks you want to look at. I see a lot of tickers coming in here. I feel like is this helping anybody, by the way? Is anyone here for the first time saying this makes more sense? Like is this logical? My hope is that like this comes across for what it is. And that is a logical approach to trading, all based in common sense. No voodoo and indicators. And if I see one more of these wannabe gurus with 14 indicators on their chart talking about their proprietary trend algorithm, like shut up. You know why they make this proprietary? They're trying to sell you crap, okay? There are 3 things that go into every single indicator: time, price, and volume. That's it. There's 3 pieces of data. How many shares were traded, at what price, and when. That's all there is of every trade. So all these 5,000 plus indicators are based on those 3 little things. They can make it as cute and pretty as they want. They can make their fancy green lights and their little dots and all that garbage. You don't need it. Think logically, okay? And thank you guys for saying that. I appreciate it. I'm just kind of talking to a screen here, so helps know you guys are following along. And by the way, if you would hit the like button on this video, I'd appreciate it. I think it helps the algorithm or something. I don't know. We're trying to reach as many people as we can. So, all right, got a lot of stocks in here. Let me see if I can scroll back and hit them. By the way, if you want to join us each week for a year, it's $5. So there's a link, tradewithross.com. You'll get the only indicator I would tell you is this chart of what's going up the most. Okay, so it's all very above board and very straightforward. All right, let me see. I'm going to scroll back here. Thanks, Mac. I paused him again. BWXT breaking. Somebody said, oh, yeah. So we can really do the same thing on BWXT. Let's take a look. Yeah, we could do the same thing. This is only about what's the risk on this one? 1%. Yeah, it looks like it's going to fall apart. If it breaks the low of that opening range, I don't really want it. Somebody typed Bernie Madoff had a proprietary product. That's a good one. Okay. We'll see. Y'all, somebody let me know. If BWXT, if it gets up here above 184, let me know. And I'll place a trade to buy the breakout above 185. I just don't want to sit here staring at it and wasting y'all's time. All right. Somebody said Oxy. Occidental Petroleum. Great stock. Yes, looks great. Now, not directly one of those groups I mentioned, but again, energy's hot right now. Whether it's nuclear, we're seeing some strength in solar, we're seeing crude. Beautiful. Who found this? Steven, you beautiful man. Yes, look at this. Look how pretty that is. Just about perfection. Nice breakout. The supply's back here from pre-April, so that's, this was tariff, right? So the tariff situation comes, stock gets hammered, comes back, tightens up, looks beautiful. You buy Oxy here, your stop loss right here at the swing low. So you're only risking 5%. Now, this is Occidental Petroleum, okay? It's a $47 billion petroleum company. It's not a little AI startup. It's not, one of these nuclear stocks. So it's probably not going to go up 150% in a month, right? So you want to set your expectations. What does the stock typically move on a breakout? But yeah, I think it's reasonable. You could see this stock over a few weeks or months get you, 20, 30% on the upside. So yeah, it looks really good. Beautiful. Great job. LTBR, what's up, Tyler? I got to get on the phone with you this week. Lightbridge, yes. Looks good. Great. Y'all see what Tyler sees here? Let's put this in log scale. You can see it better. Log scale, by the way, just even. If you've got a stock that's up like 100% like this, you're looking really big time frame, go to log scale. Notice the numbers on the side look all funky. That's because 1 inch is 30%. This inch is 30%, right? It makes it so it's the same percentage up, not dollar amount. But yeah, look what he's got here. Y'all see this? This has been a year in the making. Beautiful. Oh my goodness, so pretty. This is poetry coming out here at 20. Yeah, like it. Tyler. All right, Tyler, I'm going to text you after this. We need to set up a call with me and Derek. Thursday, same time, Kurt. Thanks, Mark. Appreciate that. Yeah, it did already break out. I mean, the best buy point would have been like here at 19. It's currently at 21. So, this would be one of those ones where it's like, okay, it's a smaller stock. You want to give it some room. But, yeah, it could be a monster. I mean, this could be a $50, $100 stock in a couple of months. So, yeah, really, really good. Lyft. Somebody talking Lyft. All right, Carlos wouldn't be my favorite. It has had a nice run here. But where are you wrong? Where's your stop loss? So this is a great example. See how the stock gapped this day? The little tab on the left is where it opened. I know some of you guys like candles. Might be easier for you to see. See how it opened up here? And then it never went higher? So it's hit sellers in there, right? It's got a lot of strength. I just don't see a breakout pattern. I don't see like a clean pullback buy. If I owned it, I don't see a reason to sell it. But if I don't own it, I don't see a reason to buy it, if that makes any sense. How about Roblox? Yeah, we looked at Roblox. SoFi, let's see. You see the pattern there in SoFi? I mean, it's just this is just so repeatable. And this was June. This is 2 months after the market bottomed out. Really, really clean. It looks great. Beautiful trend in this stock. Holding this blue line is the 20-day moving average. So if you have these stocks that are really just ripping, like I want to get in, I'm not going to wait 3 months for a breakout, and you want to buy a pullback, see what is supporting the stock. Clearly, this blue 20-day moving average is supporting the stock. So if you're looking to buy the dip, that's where you buy it, right? No more complicated than that. Buy it, risk 5 to 10%. I know I just ripped on indicators and I put an indicator on the chart, but it's just a moving average. It's just the average price that stock has closed over the last 20 days. The red one is the last 50 days. The white one is the last 200. It's just a guideline, a framework for the trend of the stock. That's all. How about RIO? What do we got here? What am I looking at, Mark? Rio Tinto. Yeah. I actually kind of like this. This is going to be a less fast-moving stock. It's an ADR, which stands for American Depository Receipt. So you're essentially buying a piece of paper that represents a share on a foreign exchange where this one trades. I believe they're South America. Where's Rio Tinto based? Let's see. UK. Okay, it's in London. This is on the London exchange. But yeah, it's a miner. Aluminum, copper, other minerals. Mining stocks are doing well. I prefer those in the gold and silver space, but This is a great looking setup for sure. Yep. 100% support this. Is this what you're looking at? See how it's come in and it's shallowed and it's tightened up and it's starting to come out here? Beautiful. Looks great. The only supply is from like a year ago. So anything past a year, I kind of let go. Nobody's sitting around waiting for a year to get out. Looks great. Beautiful. Great job, Mark. Love it. NVTS. This is going to be a penny stock, isn't it? No, 1 billion. Okay. Navitas Semiconductor. This isn't the go-kart company, is it? Navitas? Am I crazy? It's probably not. I can't be the only one here that owns a go-kart. I mean, a golf cart. Excuse me. Not go-kart. Golf cart. No, this is not it. Right? I don't think so. Okay. Go-kart. That's what I meant, the real things. You know, it wouldn't be my pick. It doesn't look bad. It's all over the place. Relative strength's a 98 out of 100. So it's like outperforming 98% of stocks in the market. But like, where am I wrong? What's it doing? It's bouncing. It's up. It's having a great day. I'll give you that. But it just makes these wild swings. So if, on the other hand, it had kind of come in and it did this, and then it kind of formed something like that, it absorbed supply, give me a breakout, so I had a pretty good idea that we're through that volume, yeah, I'd be more tempted to take it. But right now, you know, wouldn't be my pick. Okay, a lot of stocks. Let me run through. We'll do a little lightning round. PHTL, according to my stuff, does not exist. I don't know who put that one in. NTWK, penny stock. I can already tell you by looking at the chart. Yep, 66 million. So this is a tiny, tiny little stock. That being said, it's on a tear. If you trade this kind of stuff, you can grip it and rip it. You're going to see this stuff trade. The small cap stuff, and so if you look at a stock, in whatever platform, it'll have the market capitalization. See that bottom right? That's the value of the whole company. That's what it would cost you to buy every share. Small cap stocks start at 300 million and go to 2 billion. Mid cap, 2 to 10 billion. Large cap, 10 to 100. All right, so you are 1/5 of a small cap. This is a micro cap stock. All right, so stuff that small, institutions can't buy it. Big funds can't buy it. So it's not going to trade as cleanly because the law of supply and demand are not as clean with retail investors, okay? We tend to be very emotional. Having said that, it's not perfect by any stroke of the imagination, but there is some similarities there. You can still see some of that kind of breakout structure, retest, bouncing here. So in this case, it would have worked. In fact, it would have worked over here too. Really nice. I mean, look, if I put it in log scale, like, it's pretty clean, actually. So, yeah, rock with it, man. Hope you own it. Keep it simple. Tyler, that's it. LHAI. I gotta give you a bunch of penny stocks. You guys love penny stocks. If I need to do some more stuff on penny stocks, you guys love these things. This must be a SPAC, I'm guessing. It's really holding that like $10 mark. I mean, if you're looking at this, I see it. It's a really little stock, 150 million. But look, I mean, it's doing what it should do. Break out above 10, stop here at like 9, risk 10%, could be a monster. Why do I know this? Link Home. I've heard this name recently. Did we talk about it in another session? Intelligence-driven real estate tech. Yeah, when y'all talk? We talked about this before. Penny stocks move, Tyler. They do. They do. They cut both ways, though. Tyler's good. If y'all see comments from Tyler, he actually sent me his entire trade record. Every trade, stop loss, entry, exit, reason for getting out. So he's really, really sharp on this stuff. All right, look at some other SSRM. Yeah, beautiful. Looks great. Precious metals, mining stock. Exactly the area you want to be in right now. Ride the trend. I mean, it's this one. So this would have been frustrating here, but you can see kind of this breakout. Remember I told you what was resistance becomes support? Can you see here how like it goes from 5 to 10, starts consolidating, tightening up, right? This is resistance. Can't get above. Resistance. It gets above and then support, and then takes off. So watch for this stuff. You'll see it show up more often than not. Okay, if you haven't liked this video already, I'm going to show up to your house and, no, I'm just kidding. Hit the like button if you would, and if you want to join us every month or every Monday going forward, and every Thursday as well, get some other stuff, hit that link, tradewithross.com. It's $5 for the entire year. If you don't sign up, I don't care, but it's $5. I'm not getting rich off of it. Just a way to separate the people who are serious from those who aren't. IonQ, Brad. Yes, great stock in the right space. Really like it. It's a quantum computing stock. You can see I've drawn a few things on there. This is what I thought it would do. So look over here. I thought it was going to break out. It didn't, but it just, all it did was just continue, tightened up longer. When the breakout did come, nice little payday, right? I think it looks great. It's pulling back a little bit. This is what happens. Stocks don't go straight up. You wouldn't believe how many members I have that don't realize that. They go, it's rolling over. Should we get out? I'm like, we're up 500%. Like, it's down 15. It's this is part of the process. It's down 12% off the highs. I think it still looks strong. It's not even close to its moving averages. Yeah, I think it looks good. Silver. Yeah, silver is a rockin' higher. You'll see several breakout. Let me just, oh, they got it pretty close to price, don't they? So silver at 46. If you go way back and look at silver, you've got a couple of things going on here. One of the big ones is the fact that we are at, are approaching new all-time highs. So there was a couple of traders, a couple of brothers actually, back here in the late 70s who manipulated, they cornered the silver market. They owned, like, I swear to God, 100 million ounces of silver. They were like going in really heavy on leverage, controlling the market, then buying futures. And long story short, the regulators passed a law limiting the leverage you can use. They had to dump all their silver. It tanked. They went bankrupt. But that's how it got up here to 50. So it ran again, and then remember the big gold run in the early 2000s of like 08, 09, 2010, where gold got to 2,000 an ounce. Silver also ran right in here, and then it's gone dormant. And so you've got this like 45-year shallowing base breakout forming here in silver. And I think it's going to go. I mean, I think you could easily have silver at like $200 an ounce in a couple of years, and it's only going to take that, right? So silver, very, 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 very strong. Like I said, I've got those 100-ounce bars showing up today in the mail. And people say, oh, why are you buying now? It's at the highs. Yeah, well, come talk to me when it's at 200. So, yeah, silver looks great, right? And the best scenario with what is happening? Why is this not? There we go. The best scenario you can have, and especially when it comes to these big commodities, because commodities like gold and silver and crude oil and cocoa and lean hogs and cattle, and it tends to trend for multiple years. Like the stock breakouts I've shown you paid in a couple of weeks, a couple of months. You'll get an NVIDIA that runs for a couple of years, but like the burst mode there is typically, anywhere from 2 weeks to 2 months. But when you're looking at something like gold, okay, we go way, way back. And so gold will run for like, let's look at log scale. Gold here will run for, in this case, like 10 years, okay? And then it does nothing from 2011 to 2020, right? So 10, 15 years dormant. And the situation we had in gold and why, and I put this out of my emails. You get those as a member as well. I told everybody that would listen to buy gold right here. We held Saturday webinars, and I'm not trying to toot my own horn. I'm just letting you know that I'm not Monday morning quarterbacking this stuff. Here's what we had in gold. So on a daily chart, it's early 2024. Okay, and burn this to memory, because if you ever see this again, you need to take advantage. On a daily chart, you've got this big breakout pattern here. Okay, so you see how it made the big run up like I talked about. You wanted to come in and shallow and tighten and break out, okay? That's the daily chart. On the weekly chart, we step back a little further, and you would have noticed that you had like a 5-year pattern forming here. So similar idea here, coming in, still loosening up, now starts to tighten and tighten, right? So you get a 5-year breakout. And in this one, you step out to a monthly chart, and you've also got this big 15-year pattern playing out here, where once again, made the big run up in the early 2000s, and then is shallow. You call it a cup with handle or whatever you want to look at it, and then it broke out again here. So you've got all these different time frames in alignment. So when you've got swing traders and position traders and long-term, buy and hold investors, and then when all those line up, that's when you get these really big moves. And that's how gold has just, look how, it's not a coincidence that when we bought it, it's up more in the last year than this is the best year it's had in since 2011. It's the best year it's had in 15 years. It's not coincidence, but it's, the law of supply and demand, right? Hunt Brothers, thank you, Mark. Yes, that's it. Their name slipped my mind for a second. Yeah, isn't that wild, Mark? 46 years not hit a new high. And I could go on with you guys for about 2 hours on the inflation we're going to see, the fact our government can't quit spending. Democrat and Republican is not a political issue. This is a D.C. issue. They can't quit spending. Our expenses exceed our income, have every year for 2 decades. They're raising the debt ceiling. It's getting worse and worse. Rates are going to kind of creep up, and be prepared. Inflation is going to get bad in 5 to 10 years. I can just about guarantee it. I've run the numbers. The government has no way out of this other than print. And when they print money, it causes inflation. We saw that in 2020 and 2021 and 2022. So it is coming. And the best inflationary hedge is physical assets. Currency metals like gold and silver, real estate, maybe crypto. It has been historically, I don't know if that's going to hold up in this one, but so I believe we're in the early stages of a gold and silver super cycle. I think we'll see gold at $10,000 to $12,000 an ounce in a couple of years. I think we'll see silver at around $200 an ounce over the next 2 to 4 years. So that's me. Do with that what you will. I'm not guaranteeing anything, but I've got about a quarter of my retirement account in metals and growing. And again, I've started accumulating physical. I didn't see that. Ralph said that there was China silver over $52 in the Shanghai market. I did not see that. I'll have to dig into it. Thank you for the tip. But it's been a month for silver. It's been good. Now again, this is not a little penny stock. It's not a tech stock. It is a multi-trillion-dollar global market. It's not going to go up 300% in a month. It's just not possible. This is more of a longer-term position situation. I don't know on the revaluing of gold to current prices, Robert. I don't know if they can really do that. I think the law. I don't know. I don't know as much about that as I should. I'm going to dig into it some, but a central authority can't just set the price of gold and silver. Now, if they audit Fort Knox and it turns out our politicians have shoved all that stuff out the back door for the last 50 years and there's nothing in there, you're going to see gold soar if it turns out the amount of supply is much lower than we thought. Yeah, I agree, Tyler. A lot of gold mining stocks consolidating here. When you look at the mining space, MP, this is a rare earths one. It's had a huge run. It's the one that they got contracts with DOD and some others. But I just think it's early. I don't know this is going to happen, but what I'd like to see in MP to get me to buy it is something like this. And if it does that, better believe, I'll be buying this thing on a breakout, looking for 120 to 150. CRS is pulling back. If this thing will, continue to consolidate right down in here, it's been basing for about 2 months. If it continues, this could be one. Sandstorm just can't find a price too high. That thing is just ripping higher. With these, you want to kind of leave yourself open to these little micro breakouts. So any little flat base or resistance area, I mean, even, something like this, which is not great, but you go, all right, well, it's, it's close enough. It's like, you can be sloppy with these in a good market when everything is working with a strong trend in the top stocks and the top groups. I mean, a monkey with a dartboard. If I only put these 30 stocks, if I only put Sandstorm and EM Gold, Kinross, which we bought not only back here on this breakout, I identified another buy point in here, right? I hope this image gets burned into your head. I hope you fall asleep seeing this. Because when you start seeing that, you'll spot it in real time on these charts, okay? But yeah, if I gave you a dartboard, it only had these 30. You had the top 10 miners, the top 10 quantum stocks, the top 10 nuclear stocks, a couple of AI stocks. Like, you could just blindly buy them and trail a 20% stop and probably beat most money managers on Wall Street. What I'm trying to show you how to do is cut the risk down and to really be able to compound your money, getting into those explosive moments where you can make 30, 50, 100+% in a couple of weeks, a couple of months. Great. Take that win, move on to the next one. So when we get another bear market, when things get quiet, you're not forcing trades. You're not all invested when all the indicators say it's time to get out. And we haven't had time to touch on this. Maybe I should hold a session on Thursday or next Monday on this. I haven't even got into the indicators that we look at for a strong market, like the net new highs indicator. I mean, I've talked to our members about this. When we get a single net low day and we touch the 20% on stocks above the 5-day, it's almost always a great buying opportunity. That was the case on Thursday. Perfect dip buy. When we like to analyze the advanced decline line. This here showed that the advanced decline line is making new highs before the market was in April. It's why we were so bullish. It's why we told everybody to start buying aggressively. And if you listen to us, the whole market's up 20+% in the last couple of months. We haven't got into the 4 stages of the stock cycle. I mean, how we know what's happening in the market and distribution and markdown phases, et cetera. So there's a lot more I can cover, but again, I don't want to hit you with a fire hose today. I will try to cover more of this next week. But hopefully you guys got something out of this. Let's see, did our trade? I don't think our trade orders. Whoops. Not what I needed. What do we do that on? Roblox? All right. Hasn't broken out yet. We'll keep an eye on it. It's about 45 minutes into the market. If it doesn't go in the first hour to hour and a half, I'll usually cancel these because it should go pretty quickly. The sector chart we use, let me give you a link here. This is what the page looks like. If you're not a member, click that link in there. It's tradewithross.com. It's $5 for an entire year. I mean, if it's going to be hard to separate yourself from $5, I probably would not recommend stock trading. But once you sign up for that, just put in your email address and your TradingView username on this page. Okay, I'm going to shoot it to you right here. Industry strength indicator. There it is. And then once you have that, you'll just go to indicators and search TA industry strength. See it right there? So we lock it just so we give it to our members, and we don't get a million questions on it. But yeah, then you can add it to your charts. It'll look like, and you just come in and add it. I've got 2 of them. I got one in here that shows the 1 and 2 month. I got another that shows the 3 and 6. You can do it however you want. All right, guys, listen, I appreciate you all joining us here today. I hope you got a lot out of this. Those of you watching the recording, I apologize for the ads that are popping up here. I don't own YouTube, unfortunately. But if you want to join us, again, every Monday, every Thursday with these live sessions, click the link below, tradewithross.com. We also give you access to the indicator you see here on your screen and some other things we provide throughout the year. And questions, comments on this, put them down below in the comments. If you're watching the recording, put them down here. They still pop up on my phone. I'll do my best to come back and answer those as they pop up. So if there's anything I can do to help you, please let us know. Otherwise, be sure to subscribe to the channel, like the video, and I'll see y'all next Monday. Thanks, everybody.